Hello traders, this is Brombo from Creative Effects and I'm back again with another video. And this video is about a setup that I shared on Friday on the 30th. And basically we just want to talk about how did I arrive to this sell, what is it that I saw, and yeah, it's one of the easiest ones that caught my attention. And mind you, most pairs have been on a decline, and they were going so good, but at the end of the day you need to have a choice of what you want to trade and what you feel is easiest to you, and you want to target that. So if you're new to this channel, please don't forget to subscribe and don't forget to comment and like. Let me know what you want me to share, and I'm gonna make a video about that. So this right here is a setup that I shared about GBPCAD. So as you can see, my expectation from GBPCAD was that we need to sort of have a pullback back to this area right here and then start to sell. So that was my expectation. And you can see that the market has been on a decline for a very short period of time, but yeah, I was very expectant of this sell. And let's just have a look at how it turned out. And so if you look at the market, how it's actually moving, you can see that it turned out really well, and the market is actually selling, and my anticipation is that it gets even around that 800 EMA there. Okay, so now the reason why we are here in the first place is to show you a setup, how it played out, and then the reasons behind that setup. And I've always told you that I'm gonna send you these as much as I can so that you get an idea of what's in my mind, what am I thinking about when I'm thinking of setups, where exactly am I looking at, and you know, all those sort of things. And of course entries too. So I'm just gonna run the template again to try and remove everything else that is there already. Right, so if we look at this chart, guys, if you move to the higher time frames, there isn't much that you're gonna see from the higher time frames, except that your market has been bullish for a very long time, and it has been doing very well, which is a very good thing. If you drop down to the D1 time frame, you can also see that the market has started to move down for some time, and some people can call this a double top if they want, but to me, I wasn't really attracted by that, to be honest, even though the TDI caught my attention with a bounce on MBL right there, but I wasn't really caught by this. So the reason why I came up with this setup was solely based on the 4-hour time frame. So as you can see, the 4-hour time frame right here, if you look at it, you'll find that I can clearly see a double top. Now that's a very clear M on the 4-hour time frame. So after having seen that, I saw the market pull away, and to me, what I saw today was the first pullback to the 50 EMA. So that first pullback to the 50 EMA is called an ID50. I don't know if some of you have heard of this or not. So if you've got a peak formation that has suddenly formed and the market trades away, and then the market decides to come back to this area right here, and in the same area you have 50 moving average crossing there, and the market pulls away. So you call this an ID50 because it is the first pullback to the 50 EMA. So I was seeing this from the 4-hour time frame, and I said this is a very good sell, and the market is supposed to drop today. Again, I know some of you might say, okay, how about this? Is this not a pullback to the 50 EMA? This is not a pullback to the 50 EMA. Reason being, the market formed the second leg, came and bounced on the 50, and then traded away from the 50 and formed a setup wherever there, and then came down and crossed the 50. So what you want to see is, you want to see the market cross the 50 and then pull back to the 50 and go down. That is what you are looking for. So that's exactly what I saw. Like I said, my setup was solely based on the 4-hour time frame. I can show you another ID50 as well. There you've got a very nice, you can call it a head and shoulder, whichever you want, or a triple top. So you see the market trades away, and then the market decides to pull back to the 50. So that on its own is then called an ID50. The first pullback to the 50 EMA from the peak is called an ID50. All right, enough about that. Now, having seen this, and then I looked at the 1-hour time frame, and I said, okay, from the 1-hour time frame, I'm actually looking to see how many levels I have. And if I start counting my levels from here, I will say I've got the first drop, all right? And the market then pulls back into the same area of the level 3, and then pulls down again and closes right in the same spot. So in this instance, it simply means I've got my best level right here, all right? And then what happens next? Then the market drops for the second time. So dropping for the second time, which becomes my second level, and then the market pulls back and closes over there, which is more or less almost similar to the previous high. And then from there, what I was anticipating was then for the market to issue me the last push, and I was expecting the last push to get at least around the 50, the 80, 800 EMA. Sorry about that, the 800 EMA. Now, if I look from my left-hand side and see where exactly can I expect my market to react, so you're looking at highs and lows. Why is there an 800 EMA in that area? So if I see my 800 EMA from there, I can say probably I expect the market to come to this point right here, where you have a previous low, a previous high, or you can expect the market to come here where you have a previous lows in that area there. So if I put another line maybe somewhere here, it will be pretty much in the same spot right there. So those are areas where you are targeting if you are actually trading with maybe ICT or the trend lines strategy. But I'm actually trading with moving averages, so I'm expecting the market to get to the 800 EMA. Then from the 800 EMA, that's when I will have to want to see something that look like this, and then the market trades back into the 50 EMA, which is that there. All right, so after trading into the 50 EMA, then I'll probably expect a reset, and then the market can continue going down. All right, so that's for another day anyways. Now let's look at the entry and see where you could have taken this trade. All right, so as I always say, all you're looking for is a London pattern on a 15 minutes time frame. So if we open the 15 minutes time frame, this is how it looks like. So first of all, you've got your Asian box right here, and the market went up, stop handed high. If we look at this stop hand from the top of the Asian box, it's about 19 pips. So the market went high and formed the first leg, came back down and gave you the second leg. Now, for some of you, you might think probably this is my first, this is my second. It's still fine. You can still take your sell from there and profit out of it and not have any issues. But for some, you might want to take it here or here. It's still the same thing. So you've got several entry areas depending on what you understand, what you believe in. So that is a very important thing. As long as you've seen the pattern, you can then enter using any different confluence. Like for example, right here from your TDI, you could have said, okay, this is my first leg, which is a shark fin, and then my second leg, which is inside the boundary or slight bounce, and then my third leg, which is actually a bounce on MBL. So you could have taken it here or there, or actually there, depending on your appetite. But the safest place to enter was definitely that one there. So not only are you looking at candlestick reversals, but you're also looking at other confluences as well, like the TDI and sort of things. Now, they did issue you with this pattern right here to show you that the market is going to reverse. I know most of you know this pattern where you've got a candle, a bullish candle, you've got a pin there, and you've got a bearish candle right there. So having that shows you that the market is about to turn around. And then you've also got a railroad track right there. So you've got an engulfing and a railroad track. So the railroad track right there showing you two candles, a bearish and a bullish candle. So which is why I said your entry can be right here. If you are someone who has got so much appetite, your entry could be right there. So can you see that if you want to take it here, it's still pretty much the same place with your railroad track. Now, this entry, or for starters, this one was gonna be based off the news, because there was a news event that was coming after this candle. So what happened was you were going to see price rejection and jumping, and just wait, because if you wanted to take the trade here, probably the broker was not going to allow you to open the trade because of the news candle. He was just going to be like, no, you can't take a trade now. So it would have been easier to take it from the top there when you see price rejection on that candle and take it, or even a few minutes before that candle closes, just before the news. So these are all the things that you're looking at, guys, and these are textbook setups. To be honest, you're waiting for M's and W's to appear on the 15 minutes time frame, and if they don't, then don't take them. let's look at USD card. You can see USD card. I was actually showing my students that these are textbook entries, and I don't even care that the market is now pulling back. They are pulling back because it's a Friday and they just want to close people on a loss. That's all. But these are textbook entries, things that you actually look at and be like, oh yeah, this is nice. Even on my left hand side here, I've got a very nice W as well. If you come to USD CHF, of course, today we didn't get an entry. And again, these are things that I always talk about. If there's no entry, there's no trade. Like I would have told you that expect a W there, but look at all this. There's not even a single W that you see there. So it simply means you cannot take the trade. So what you're looking for a clean W. You're looking for a clean W, something like this that you can actually look at and be like, oh yeah, this does look like a W. So you can see it in several places. In other trades, it was straightaways, but in other trades, it was definitely M's and W's. And I don't know if Euro GBP shown it. Euro GBP did show a setup as well. It might not be a clean W, but it was not bad. NZD USD did show an M there because it was going down. It did show a nice M there, but because it is an Asian pair, it was definitely going to show you some of its legs in the Asian session. If you look at Euro odd did show you a very nice W. You see that W there? That could have been too big for you the previous day, but this is one of the nicest W you will ever see. And all you do, you just take a buy and let the market pay you. Or the USD, I'm not too sure. Yes, it did give you as well a nice M there. You can see M with a short first leg and a longer second leg. GBP Chef gave you a very nice M there, and right there you see very nice M right there. Let's see another one. Eurocard. This pair I did send a setup for it, but it still hasn't moved. And from the way it looks, the only time it gave a setup was yesterday with this W right here. But today there's really nothing to look out for. It's not even clean, not even clear. So there's nothing we can do about it. I don't know if gold did issue anything. Yes, gold did as well, with a very nice M right there. So all these are things that you are looking at, and unless you see all these things, you cannot take a trade. So take a trade only and if you see these things appear on your time frame. All right, thank you very much, guys. I hope this video has also helped you to understand why I took a sell on GBPCAD, and thank you very much for your support as well, and hopefully you guys are enjoying and gaining as much knowledge as you can, and enjoy your weekend. See you next week on another fruitful week as well. Cheers, guys.